this risk disclosure statement, and it is necessary, required by the FTC. I'm not going to read it necessarily, the whole thing to you, but you do need to know that trading security futures contracts involves risk and may result in potentially unlimited losses that are greater than the amount that you deposited with your broker. As with any high risk financial product, you should not risk any funds that you can't afford to lose. Now, with what we're doing, it's all simulated. There is no money involved. I do not recommend you put any money into the market at all. The way I intend to teach you to do it is you're going to do it with a simulated environment, paper trading first, then go to a prop firm where you can get funded there with very, very little capital risk. You'll just be paying them a monthly payment to assess your trading and maybe additional training and stuff over there. But do not put any of your money in the market, like depositing it into a brokerage account and try to make this go without first having been successful on a paper trading account for at least 6 months. I just wanted to go over this trade setup I've got here. Market's been choppy. It hadn't been an easy one to trade. We had this large fair value gap created on the downside, and then price just kind of trickled back up, slowly going back up. Did not take out the fair value gap. These candles here were never hit. It would have to go all the way up there and then have a candle body close above it in order for that to be no longer valid. So I waited for the consolidation, actually waited for this fair value gap to form for a little confirmation. And I got short. I tried to get short up in the top of this, but it ended up filling me there. And my target is actually, I'm really considering taking the trade off right here because that's kind of where I was looking for price to go. Here's another one. Both of these would be places where stops would be sitting. And so the algorithm would take out those stops and then reverse, and then it would start eating away at my profits. So I'm really tempted to take it off at that point. But if I look all the way back here where I have it set right now, there's another one. And then there's some liquidity down here that I'd marked out from a few days ago. So I'm kind of on the fence. Do I go ahead and take it out, or do I go ahead and let it run all the way down to my take profit? That's where I'm looking right now. I'm just going to let it play out and watch very, very closely right here. I'm actually going to go down to a smaller time frame, a 1 minute time frame. And so I can just really monitor closely what the price action is. We just had this big fair value gap form. Again, there's a lot of selling pressure. So kind of thinking we may go ahead and trade down into this area. Well, this was a silver bullet setup taken between 10 and 11 New York time, 9 and 10 Central, from where we are. So we were consolidated. We'd hit this level several times and then put up the gap, consolidation, retrace almost all the way back to that consolidation area. And then we had another fair value gap form right there. It looks a lot different on the 1 minute versus the 5 minute. The signals aren't quite as clear as I'm looking at them here. But sell side liquidity, I know I had a bearish fair value gap, and so far this would be the top of it, and it's been respected. So I was in a mind to go short anyway. I tried that yesterday 3 times and failed each time. Eventually price did go, but in the afternoon did go where I wanted it to go, expected it to go rather. And but it didn't go all the way down where I expected it to go. I was expecting it to come and fill, and I have to go a long way to find this one. There's a fair value gap right here, and it's a big one. This candle right here ran from here all the way to there in a 5 minute frame, and it's still holding. Nothing's just taking it out. That's the closest thing to taking it out. So with the bearish, that means on a daily chart, a bunch of higher time frame sellers have sold. And then on the daily, these folks here drove it back up. So we got the bulls and the bears battling it out. I'm just trying to get in line with them. And looks like we're continuing on down. So that was not our place where we were going to sell. It looks like it might actually hit my take profit. Another consolidation. I still expect it. We're not going to get that close to this liquidity and not take it out. I don't think we will. So I'm going to go ahead and move my take profit down just a little bit more to this one. There's just no reason it wouldn't. There's orders sitting there and they've been there a good long while. Let's take it back to a 5 minute just for a second. Let's do a 15 minute so we can see what I'm talking about with this sell side liquidity. So right here, price had dipped down, and people that are long, they're going to be having orders here, stop orders here, and people that want to go short are waiting for it to break that level. Larger time frame people, not the institutional folks the retail folks like me. So it's possible, 50% of that. We may already be there. So it's just a situation here. Monitor it very closely. If you see it going against you, kill it, take your profit, be happy. I see we are still trickling down, but we're not really moving down in a rapid pace. I'll try to hold out for that. It would be a good idea if you're in a trade like this to go ahead and move your stop to some place where you're going to be able to take profit, because this thing can whip and turn in a blink of an eye. Okay, so that candle set up right there, I don't like it. I'm going to go ahead and take my profit right now.
Order filled.
And that was $1,000.52. And that's how easy it is to make money. Now we'd be looking for a possible reversal, because we did take out one of these lows right here. Didn't quite make it down to that one. Maybe we did. No, we didn't quite make it. But this would be a good place if the liquidity was right there on that other one, where we're looking for another fair value gap, consolidation, continuation. We would have to take out this recent swing high. Just with the price action of late, this is also not my time of day to trade. The next trade I would take would be in between 1 and 2 o'clock. I would be looking for a silver bullet setup, but that's the only two times I look for that setup, is between 9 and 10 Central Time and 1 and 2 Central Time. So that's it. I think $1,000 day is a pretty good day, so I'm just going to stop right there. And that's on one ES 500 contract. The S&P 500, the symbol is ES. like that in Trading View. So yeah, good trade, good trade.